Every day for the past 4 years, I've said, buy Bitcoin, don't sell the Bitcoin. Uh, I'm going to be buying more Bitcoin. I'm going to be buying Bitcoin at the top forever. I joked with Dave Portnoy today. He said, I missed it at 10,000. I missed it at 20,000. I missed it at 100,000. I said, Dave, it's still less than a million a coin. You're getting a 90% discount from a million a coin. I'm sure that I will be buying Bitcoin at a million a coin, probably $1 billion a day of Bitcoin at a million a coin. And so I think it's a very simple idea. It's just keep buying Bitcoin with your spare capital. It's going to appreciate against the dollar forever.
So, Michael, so if I don't own Bitcoin, though, and I'm listening to this, your advice is buy here or no, wait for a pullback? And then when I do buy, Michael, your advice to folks who are listening about how to do that, what do they buy? You know, do they dollar cost average into Bitcoin? What's your advice?
I think you should think of Bitcoin as a long-term capital asset. So if you have money you don't need for 4 years, or even better yet, for 10 years, you put it into a portfolio. You might hold scarce desirable real estate. You might hold your favorite artwork. You might hold some portfolio of companies you're going to hold forever. I think a part of that is Bitcoin. So I say dollar cost average into Bitcoin every quarter, sweep some long-term savings into Bitcoin, expect to keep it there for a decade or longer, and don't get too worked up over the volatility in the near term.
Well, and Michael, you know, you kind of alluded to this, that you don't try and time the market here. You're just going to, the strategy through MicroStrategy is to just keep buying consistently, regularly, no matter what the price is.
Yeah, I mean, I look at it like Manhattan real estate. The year is 1650. And if you had a chance to buy it in every decade from 1650 to today, wouldn't you just keep buying it? If you didn't have to pay property tax and you could hold it, you would just keep accumulating it forever. There's never a bad time to buy it. There's a SAYLOR tracker. You can look at it. It just shows we bought at every price point, every quarter, at the highs, at the lows, at the mids. I bought it every week for the past 4 weeks in a size billion or more. I'm going to just keep buying it. And it's not that complicated. I expect that it'll be the most valuable thing in the world 100 years from now. So why wouldn't you just keep accumulating it?
Michael, we've talked a little bit about this before, so I want to just re-up the question before we move on. When you've likened it to Manhattan real estate, you collect rent on it, right? So at some point, do you somehow, monetize the Bitcoin that you hold in some way?
Yeah, well, imagine I gave you the chance to buy 40 city blocks of Manhattan real estate 100 years ago, but there were no buildings on it and there was no rent associated with it. But you knew it was going to be the greatest city in North America and you could buy it and hold it. You would still do it, just like you might buy Alaska in 1867, even though there's no rent on it, because you think that over the next 100 years, someone else will find a way to take advantage of it. With Bitcoin, it's cyber Manhattan. There's 8 billion people that have money. They're not going to live there, but they're going to put their money there because everybody has to park their money somewhere. And so you're just buying one block out of 21 million of all the capital in the world. It'll be the center of the digital economy. You may not know the applications, but there are applications. MicroStrategy makes a lot of money by holding that digital property. We're generating massive amounts of shareholder value from that. So you don't have to understand how we do it. You just need to hold your Bitcoin and let us drive the price up.
And Michael, obviously the move since the election has been powerful. Trump is moving back into the White House. He clearly positioned himself, as an ally of Bitcoin, an ally of crypto. What would you like to see, Michael, his priorities be now, his policy priorities?
Well, I mean, I think low regulation, low tax, pro-innovation policies give people, specifically with regard to digital assets, if we have a digital assets framework that supports digital commodities, digital securities, digital tokens, digital ABTs, digital currencies, digital NFTs, so that people can innovate in the United States of America and spread those assets everywhere in the world, I think that'll be good for the world and good for the United States.
Michael, I'm curious because we've talked to some of your peers in the crypto industry who have talked about maybe some of the friction at times that they have felt when they've been trying to buy crypto assets under the existing regime, under Gary Gensler at the SEC, for example. You guys have obviously accumulated an awful lot of Bitcoin at MicroStrategy. Has there ever been that kind of friction? Have you seen those regulatory obstacles to what you've been doing?
Well, I think Bitcoin is the one digital asset that has the most regulatory clarity in the world because there's general universal consensus that it's a digital commodity. The friction on Bitcoin has been slow approval of the ETFs, the inability to do cash create and redemption, the slow approval of the options market on the ETFs, and resistance to banks custodying and handling Bitcoin. So that's held back the asset class. I think that a favorable crypto regime will accelerate the development of Bitcoin. And I think on the digital asset side, right, just the lack of a digital assets framework for digital currencies and digital exchanges and digital tokens has put that industry in limbo. And I think we're looking for those things to be resolved with the incoming administration, and that should accelerate growth for everybody.
And Michael, this week on the show, we did speak to Senator Kirsten Gillibrand. And I asked her, Michael, specifically about this idea of a Bitcoin strategic reserve. Listen to her response here.
I don't know what the purpose of a Bitcoin central reserve is, and I haven't really seen the details of any idea about why you would do that and why that's important. I think it would have an obvious impact of supporting the Bitcoin industry, which in and of itself isn't good or bad. I just would want to know what the reason is.
All right, Michael, so the senator not sure about the reason for it. What do you say to that? What's your response?
Bitcoin is emerging as the world's reserve capital network. If you want to store your capital for the long term and you live in Africa or Russia or China or South America or even the US, your choice is local real estate or local stocks or Bitcoin. Well, people are realizing that Bitcoin is better than real estate. It's better than stocks. There's not a single company or real estate property in Africa that you would rather own for the long term than Bitcoin. So the very simple idea is buy 20 or 25% of the Bitcoin network on behalf of the US government, catalyze the development of that world reserve capital network, and then let all the Chinese and the Russians and the foreigners sell all their other assets and buy Bitcoin, and then the money flows into the United States. If you want to put a great twist on it, dump your gold, sell all the US gold, buy Bitcoin, then the trade is free because you could buy 5 million Bitcoin for the cost of the gold. You will demonetize the entire gold asset class, and our enemies hold gold in their banks, so their assets would go to zero. Our assets would go to $100 trillion, and we would control the world's reserve capital network as well as the world's reserve currency network.
As usual, you're painting a grand and vivid picture, Michael, with this kind of stuff. I know your long-term price targets are sort of almost infinite. Let's talk shorter term, and let's assume that the Bitcoin reserve doesn't happen, right? Let's assume that conditions continue as they are. Where do you see Bitcoin at the end of 2025?
You know, I don't chart it month by month, but I noticed that it's been a 60% ARR for the past 4 years and even before that point. And my model is generally that it will grow at 60% ARR, decelerating to 20% ARR over 21 years. So if you start to crank in 60%, then 58, then 56, then 54, and you put that on a scale, absent the cyclical volatility, you get to a forecast which makes sense.